According to the latest report from the Central Bank of Nigeria, total net credit by the Nigerian banking sector to the government increased by 2.2 trillion naira. That's in the first quarter, which ended March 2022, to 16.32 trillion naira. The Apex Bank's data on money and credit statistics shows that the net credit to the government rose to 14.12 trillion naira as at the end of January 2022. To 14.72 trillion naira as of the end of February 2022, indicating an increase from the first quarter figure of 2021. Well, joining me now via Zoom to analyze the impact of these figures and, of course, what they mean for the financial sector is a tax manager, tax and regulatory services at Deloitte, Mr. Oladiji Boduwa. Thank you so much, Mr. Boduwa. It's your first time on the show. We appreciate this.
Thank you so much, Tolu. It's a pleasure to be here.
Yeah, total net credit by Nigerian banking sector increased by 2.2 trillion naira in that report for Q1 of 2022. Let me ask the layman question now. What really is the implication of this development?
I think before we try to look at the implication, we must first start. I mean, it's not a surprise. First of all, we must say that given the reality of Nigeria's fiscal situation, the news, I mean, it's not a shock. I mean, if you look at our budget, I mean, we see that we had a significant deficit of about 6.25 trillion, right? And it was just like a month ago that we saw our President Buhari, go into the parliament to request for an increase in that deficit, of about an additional trillion. So that tells you that, I mean, this deficit must be funded somehow, and the government is looking largely at borrowing, right? So, but in terms of implications for the financial sector and the banking sector specifically, I mean, these are local borrowings. The expectation is that sovereign bonds will be issued to these banks. And so in terms of exposure, I mean, we do not really see any exposure, for the banks because, I mean, sovereign bonds are very low risk. I mean, the risk of default is very low from the government. And so it's just looking at it from the perspective of the government trying to, plug the deficit that it has in the budget. And if anything, the focus should actually be more on the foreign debts, because those are the ones that have significant impact on our Forex reserves and also impact, when you're looking at the debt to GDP ratio.
Interesting stuff there. But what is your assessment? Because in that same report, the CBN plans to review the performance of its various interventions. We've seen a lot of these interventions in the agricultural space. We can go on and on. Textile, the pharmaceuticals, all of these sectors. What do you think, or what is your assessment of all of this and this move by the Apex Bank?
Well, I think that it's a minimum expectation from the CBN. I mean, a lot of funds are being committed to these intervention projects, significant funds. I mean, it is quite a lot. It's quite a lot. I mean, when you look at some of these projects, so it's minimum expectation that the CBN should be interested in trying to review, to have an idea of how well these projects or these funds are being utilized, and in terms of how well are they achieving the desired impact on the economy. So it's expected. I mean, for instance, if you look at between January and February, CBN disbursed about 30 billion naira under the Anchor Borrowers Program for farmers. We have other projects, along that line as well. So for me, I would say that it's important that CBN, continues in this manner. We continue to evaluate the success or otherwise of these programs, and I mean, where they are successful, then yes, we keep pushing on. Where there are gaps, then I mean, it's a call for us to look inward and try and see how best we can restructure. But I would say, lastly on this point is that I think that the focus should now be more on trying to find more empirical ways of actually evaluating the success of these projects, as opposed to just paying lip service to them.
Yes, that's where I would follow up. We've seen the rice pyramids, the maize pyramids. We've seen the National Theatre being renovated and all of this. Do you think that these interventions really have yielded positive impacts, or are we still in a transition period?
Tolu, I think it's difficult to say. It's difficult to evaluate some of these investments that have been made. And that's because, I mean, if you look at some of the concerns that we have around these projects, there's a general feeling that, they might be a bit opaque in terms of the process, in terms of, transparency as to how these funds are accessed by the target market, that these things are targeted towards. So it's difficult to, from my own point of the table, to try and assess and say, oh, this is how well it has done. And if you recall, I did mention earlier when I was speaking that I think CBN now needs to find empirical ways of trying to demonstrate to us, to say that we have this project, this how much we have committed to it, and we are able to measure the success. For now, I would say it's mixed because it's just difficult to evaluate. We don't have any data or statistics that helps us to come to some form of analytical position on how well these things are fared.
Another sector very important to growth, of course, is the manufacturing sector. And clearly, the sector is bleeding at the moment with all the failures we're getting from them. We talked to their operators and, of course, even the management of the Manufacturing Association of Nigeria. Now, what can be done at this time to improve their level of productivity? Because that is really important.
Well, government has been trying. We must say that first. But I also think that we need to focus on key priority areas. For the guys in the manufacturing sector, we are looking at things like infrastructure. And these priority areas cut across other sectors as well. But since we are speaking about the manufacturing sector, we are looking at infrastructure, power. These companies spend a lot, generating power for themselves. We are talking about the road networks. We are talking about investment in other means of transportation, and the government has done quite. We are starting to see significant investment around rail transportation. But then again, as government is investing, we are hearing news about pilferages. We are hearing news about people going to steal the rail tracks, things like that. So that dovetails into another conversation around security. A lot of guys in the manufacturing sector have their farms, in parts of the country where we are currently experiencing security challenges. So those things are things that need to be tackled. We need to look for ways to tackle the infrastructure gap that we have. Investment is going on, but again, to also ensure that those investments are not wasted, right? We also need to tackle the issue of security. There are also challenges around Forex as well, and those are wider economic issues that we also need to look at, because again, if you look at these players, they depend a lot on importation. They import a lot of their raw materials. So the impact of the volatility in exchange rate between the naira and the dollar impacts them a lot, and then it flows down to the common man on the streets. So we have seen rise in inflation. Food inflation is up. Headline inflation is up as well. Yeah. So I think that the focus should be around those key priority areas. I would say infrastructure, security, and once we are able to manage those to a large extent, then we start to see the benefits, for the players in that sector.
I would like to stay a bit around the Forex issue before I move to my next line of thoughts. What's your assessment of the level of the management of the foreign exchange space for some time? Many analysts have called for an open market system. Let's just let it run with market forces demanding demand and supply. Do you think that can work for a country like Nigeria, looking at our level of productive base?
I think it's difficult to, and that you also see that reflected in the way the CBN has, tried to approach the issues on Forex. I think it's difficult to just leave it open to the forces of demand and supply. But then again, the alternative to that, we can see that it's clearly. We've had our challenges with that as well. Trying to regulate it, trying to operate some sort of mixed system, where we sort of try to manage the Forex. We've seen the wide gap that we have between the official rates and what's obtainable in the parallel markets as well. So I would say that the CBN they are doing their best at the moment. I don't think either way there are some fundamental economic issues that that need to be addressed. We need to look for ways to reduce our import dependence. Those are the things that, regardless of whether it's an open market system, led directly to forces of demand and supply, or whether there's some form of government intervention in the management of Forex. I mean, if we are not looking at things around, ensuring that we are able to, produce enough to even export, so that we can generate Forex reserves and reduce the import dependence on importation. If you're not able to address those, then I think that it's immaterial what system we run. So we need to go back to the fundamentals and try and address those issues.
Going back to the fundamentals. Now, the level of stability of Nigerian banking system is something that is also very important. And many would talk about the borrowings and all of that, but at least we still see the banks posting good figures in recent times. The exposures to loans also from the oil and gas and, of course, the power space is something that many say is threatening. Are you worried about this?
Not quite. Like you mentioned, the Q1 results for all of the banks, the PLCs are out, and they've all performed, quite well. In spite of expectations. I think there were expectations that because of the Ukraine Russia crisis and all that would have had an impact on their profitability and all that. But that's not what we've seen. What we've seen playing out is that for a majority of the banks, they've done well, year on year, or if you're looking at it on a periodic basis. So I would just say that in terms of exposure, for the oil and gas sector specifically, we see what's going on. Crude prices have remained strong. We are looking at over like $100 per barrel. So they remain strong, and we expect that they might stay that way for a while. And so for the players in Nigeria in the upstream and midstream sector, especially, it's positive for them. It's a positive outlook, because when you take a look at that, I think barring any what we call force majeure, we are expecting, it's a positive outlook for them. And in terms of exposures, that's for the banking sector, to loans, to companies operating in that sector, it's also going to be positive as well, because when you look at that, and you sort of say that, okay, oil prices are at this level, and we expect them to remain there. The only thing that we also need to consider is the fact that we've been dealing with the issues of theft of oil. So even though prices are high now, production has been impacted. Lately, we've seen the federal government trying to make some efforts to bring some form of stability around that, security and all that, in that sector. But give or take, if you look at the oil theft, when you counterbalance that against the oil prices that we have now, I would say that it's positive outlook, and the banks, I wouldn't say that will suffer from any undue exposure as a result. Rather, it's kind of like a benefit right now.
Okay, let me use this opportunity, speaking to a manager, tax and regulatory service. Now, government is clearly looking at the tax space, looking at that environment to, of course, get more funding, particularly at this time. We know that we have to service debt, we have to do all of that, which you also alluded to in your submission earlier. What would you say about the move aimed at improving our tax system? Are we getting it right? Or what can be done to get it better? I think it's always better when people are willing to pay taxes, not being forced to pay.
Yes, I agree. I think to your first question, I think that we need to commend the efforts of the tax authorities and, by extension, the government. There's been a lot of focus on taxation. We've been trying to reposition and refocus from, trying to focus so much on oil revenues to non-oil revenues. And we've seen the impact of that focus. It's quite evident in how much, we've been able to raise from taxes. So a lot has been going on. There's also focus now from the tax authorities to try and, digitize that space, introduce technologies, a lot has been going on again in that regard for like the past 2, 3, 4 years, So it's quite encouraging what we see in the tax space, but I would say that we still have a long way to go. I think tax to GDP ratio currently still sits somewhere anywhere between 6 to 8%. In more advanced countries, we are looking at about 30%. So, I mean, we still have a wide gap to cover. And I would say that maybe focus should now shift towards trying to capture the informal sector. A lot of the big players, the multinational entities, the big companies, yes, they are doing their bit already, right? So there's only so much you can get more from them, because they've always been compliant, So we now need to look at areas where we probably haven't been able to, cast the nets, around, to sort of broaden the tax base. So that would include the informal sector. A lot of players are there, and we hear that they sort of account for over 70% of employment, So that's where I think that more efforts, should be targeted towards, so that we can realize the potential. There's a lot of potential in the tax space in Nigeria, but I feel like it's still largely untapped. But I know there are efforts, from government's part to try and focus on that.
All right, before I let you go on the final note, you've actually touched on the outlook for the entire financial space. But now I want to take you with the fact that the war in Ukraine, that's Russian-Ukraine crisis, what implications do you think that could have? First, maybe on investments and Forex inflows.
So first of all, I think largely, like I mentioned earlier, and like you just said, the outlook for the financial space is currently looking quite positive. The impact of the Russia-Ukraine war, I would say probably because of the fact that we are not as dependent on Russia or Ukraine in terms of maybe imports and all that. We are not as dependent, in terms of trading, the volume of trade that we have with both countries compared to what you see in maybe other countries in the EU or some other African countries. Yeah, so we have not been directly in terms of impact, aside from the impact of oil, of course, because, as oil prices have trended upwards because of the fact that we have significant expense on the subsidy side, it means that subsidy is also increasing as oil prices increase. But if you take that aside, I would say that largely for the financial sector, the outlook still remains positive. And if we try to also even go away from just the Russia-Ukraine issue, you look at the stock exchange, the all-share index has gone up by about 22% just this year alone, and that tells you that at least the equities market is doing well. Conversely, if you look at fixed income markets, it's probably not as buoyant as it used to be, or as we used to have it like 2-3 years ago. And one can say that perhaps for foreign investors who have their monies in Nigeria, if you look at the return that we have on fixed income investments, and you compare that to the inflation rate, which is about 17%, it doesn't make sense for an investor to put his money there. So, and if you compare what the ASI has done, that the all-share index in terms of return so far, that's sitting a little above inflation rate. So that sort of might give a direction as to why we are seeing that trend in the equities market. So I would say that generally it's a positive outlook. We are hoping that we maintain this as the year goes by.
Great stuff. Thank you so much, Mr. Oladeji Bodunwa. He is the manager, tax and regulatory services at Deloitte. Thank you so much for your time on the show. We'll see you soon.
Yeah, thank you, Tolu. It was a pleasure.